All right, how's it going, everyone? I hope you're doing well today. Welcome to another video. This time it's not going to be a trade breakdown example. I've realized that in those breakdowns, there's probably a lot of things that people do not understand. Therefore, I'm going to make some videos that are not related to actual trades and my executions all the time. I'm going to explain some of the concepts and some of my viewpoints around trading and a lot of the tools and skills that I use. And with that being said, this video is going to be strictly about charting and technical analysis, as some would call it. And there's a lot of stuff out there on the internet that I don't necessarily agree with. And so in this video, I'll be explaining how I view charts and how I use them as tools and how I believe that they are not everything, right? Charts for me are essentially looking at where the stock was and understanding where participants are positioned at, not necessarily looking at patterns. I'm really looking at where are they positioned, how are they positioned, what have they been thinking over the last, say, couple months, couple years, and then where are we at now, where are they positioned, and what are they thinking next? What is the big money thinking, the big participants, the people that actually move these stocks? What is it driven by? And from there, I'm trying to understand in these candles, not necessarily some magical pattern like you see on the internet. I'm looking at what are people thinking, how are they feeling, what is the emotion, and what is the context behind the stock, what's the story. And so I'll be going through a couple different examples here, about five, which we'll dive into in a moment. But just to start off, I'll explain like how I view charts and schematics, I guess you could say, and stages. And so for me, we have a couple things. We have a steady uptrend. This is just, oh, sorry. We have a steady uptrend, just higher highs, higher lows, and we're not getting overextended, and it's just grinding to the upside. It's not some major extreme outlier move. We're just seeing consistent moves to the upside over time. Very similar to the NASDAQ itself, how you don't want to step in front of this. Most of the time, we are likely to continue to the upside. It's just common sense. You don't want to bet against America. You don't want to be shorting the NASDAQ all the time. Obviously, there's certain situations where, sure, you want to, but for the most part, you do not want to be doing that. And so this is what a consistent uptrend looks like. To me, this is, again, if you're an investor, fantastic. But on a trading perspective, there's nothing too crazy here, in my opinion. It's not something that I'm personally that interested in. However, that's what a consistent uptrend looks like for reference. And then obviously there's consistent downtrend. And for me, again, this is just a steady trend. We're not seeing outsized moves to the upside or the downside. This is just a very steady slope, you could say. It's not getting too crazy. From there, I would say we have choppy markets, which is no man's land. You do not want to be trading this. This is how you get fooled by randomness, thinking that your trades are actually doing something and you understand and you have edge, when in reality you do not. Very similar to the NASDAQ currently. This is no man's land, just choppy action, and this is how you get fooled by randomness, right? And so what I mean by there's a lot of bad information online is that you have people trading NQ, which if you don't know is like the futures contracts for the NASDAQ, and ES, which is for the SPY, I believe. And they're getting fooled by randomness. They are in these ranges each day, simply just, it's a coin flip most days. There might be a couple days here that have edge where you have some breaking news that comes out, which there's a lot of traders who do really well in those types of trades. You might have a little bit of an overextension to the downside like we did here, and maybe people position and get, that major recovery. There's little things like that, but from my perspective and from what I've observed with all the traders that I know is that this is complete randomness and there's no edge. In fact, the firm that I was at for a while, one of the guys that was there that was a higher up said if he could, he would bet against every single trade at the firm that was taken on like the NASDAQ or SPY, and over time he'd make money because even the best traders in the world, the people that are the fastest, the best technology, everything like that, they they don't have edge in these kind of events either, right? It's not like we have some magical tools, right? I mean, at the end of the day, the market has to move. You need volatility. You need understanding and why behind the trades. Otherwise, you will be fooled by randomness, and you'll be like a lot of these guys online that trade these funded accounts. I'm not going to say any names that to me are literally flipping a coin each day and managing risk kind of, sort of, and hoping that they're right. And to me, it's a bit of a joke, but That's for another video. So yeah, we have steady uptrend, steady downtrend. We have a sideways trend, which is no man's land. Please stay away. And then we have the events where oh, we see very steady trend, and then we get that like explosion to the upside where we pretty much go vertical, right? And then vice versa. We have a steady downtrend, and then all of a sudden we start to speed up, and we start to get big moves the size of the steady trend in a very short period of time. That is what I would consider a overextension. That's an overextended trend. Very similar to silver recently, very similar to gold as well, and then also like the crypto markets and a lot of these small cap stocks that get overextended on a weekly basis. So these are the phases that I view the market in: steady uptrend, steady downtrend, no man's land, choppy action, and then we have overextended trends to the upside and the downside. And so that's pretty much how I operate out of. I'm asking myself these questions every single day. I'm saying, you know, are we in a steady trend or a extended trend, or are we in no man's land? That's pretty much what I ask myself every single day. And I avoid no man's land. I don't short uptrends that are steady. I don't buy downtrends that are steady. If anything, you want to be positioned with the trend because trends are always more likely to continue than revert unless they get overextended. And there's variables that make it overextended, which come with experience, but there's also some objective ones on the chart, which we'll talk about as I go through these examples. However, this is basically my philosophy around charting itself. And again, charts are not everything. These are very small pieces to the puzzle, which you will not hear a lot of online. So that being said, starting off with NCI, this is a overextended to the upside example. I actually traded this yesterday. I ended up making $6,500 in this symbol. Well, like 6,400, but yeah, just explaining why it's overextended. We can start off here. So if we were to go down to like a 15-minute time frame, we see this move just starts igniting down here around like $1, right? And so what happens is this thing just grinds up. We see a big move, and then we kind of just chop around, right? We see another big move, we kind of just chop around. We see another big move, we chop around, right? That is the steady trend I'm talking about. This is that steady uptrend. In these environments, you do not want to be shorting. You want to be buying, if anything. Personally, I don't really play with the trend very often. It's just not the game that I'm currently playing. And I haven't played that game in a very long time. I prefer mean reversions, which are those very overextended trends with a lot of emotion that end up reverting back to the mean. That's the style of trading that I personally trade. However, there's nothing wrong with the other way to trade, buying with trends and things like that. There are people who make tons of money with that, and there's all sorts of other strategies that people make money with. But for me personally, I'm looking for those very big overextended trades. And so this was on my watch list for, pretty much since this day here or this day back in mid-February. So 2 weeks ago now. And what I'm looking for is that slope to increase like we're talking about, like this. And so we see the difference here. We see steady trend, steady trend, steady trend, and then this is when things start to get overextended for me. And I qualify overextension by outlier gap up, major after hours squeeze / pre-market, or major intraday outlier range. And I can show you guys what I mean by that. So in this case, we have the steady uptrend, and then we start to see a big move away from that trend. This is like one of the bigger moves we've seen out of this whole run in itself. And so whenever I get this, I'm thinking to myself, okay, this is probably setting up for a short soon. I want to see this thing go higher. After this day, I want to see it make a big move, like a gap up or squeeze in the after hours, which is what we got. So if you look, we get a big move on the intraday away from that steady trend. And then we get this move after hours. I did not see this. This was on a Friday, and I just was not on my phone or computer, and I didn't see it. However, for me, this is an area where I start taking a short starter position. And again, I did not because I was not on my phone. So coming into Monday, for me, this is a signal that the stock has very likely probably topped out or is near topping out. Is it always the case where it tops out in after hours? Absolutely not. However, Like I said, for me, this was a confirmation that we were getting overextended from that uptrend, and I was looking to get short. And again, this is just a chart perspective. There's a lot of other nuances based on the stock itself, which made me interested in it, which I'll dive into in a moment. But I'm really going to try to save that for the trade breakdown for the specific trade, since I ended up trading it yesterday. Did okay in it, made about 6,400, and I'll be explaining that trade completely separately in a different video. But with that being said, this is whenever I first started to see signs of acceleration and ultimately overextension. And so coming into the actual day, I ended up shorting within this spike right here around $8. And then I ended up shorting a lot more within about $7 down to $6.50. My average ended up being, I believe, $6.58. And then I covered everything between $3.60, $3.90. So I ended up catching my average was 658, so it's pretty close. I ended up catching a 45% move to the downside, essentially. And again, it's really for those factors that I just mentioned, where we see acceleration and we see overextension from this steady trend down here. And like I said, there's other nuances, but if we're just purely talking about the chart, that's the signs on the chart that made me think that this trade was probably ready to be shorted. And so if we were to look on the daily chart, which is where I make most of my decisions, we can see from a technical perspective, we are up, let's see here, this thing topped out around $11. So we were up 1,300% on this symbol in like a 2-week period. So for me, like I said, that is a sign of a short for small caps. This is a small cap stock. This company is not that great. It's a Chinese company. It's not a very good company. It should not be at these prices, essentially. When stocks get to these prices in the small cap market, unless they're super hyped up by retail or there's really fundamentally changing news, like a partnership with a real company or some type of big dollar amount deal or some type of merger acquisition or something like that, that's the only time that these moves actually might sustain. And instead of ending up crashing back down into these prices again, you might see something like this where it goes sideways and then makes a new leg up. But in this case, because of the context around the stock, the story, the country that it's in, and the actual news headlines themselves, for me, this met all my rules for a short. And if we're thinking of it again, just from a chart perspective, we have a stock that's up 1,300% over about a 2-week period. We have 1, 2, 3, 4 consecutive green days at the time of the short. And then whenever I think it's topping out, we're making a move that is literally the size of that daily bar within a very short period of time whenever we end up topping out around $11 in that after hour session. So again, that's kind of a lot to take in for a lot of people. This is definitely a lot of information all at once. However, essentially, all we're doing here, if we're speaking just from a chart perspective, is we're seeing a steady uptrend, right? We're seeing a steady uptrend in a stock that we know is not a good company. We know has a very high likelihood of coming back down and crashing. And so all we're waiting for is signs of euphoria, signs of overextension, which is shown either through massive range on the intraday, which it just means during a daily period, or we're looking for like that big gap up in the after hours or pre-market that shoots us away from the consistent trend like we saw here. We saw consistent trend, big green day, and then we saw that big move in the after hours up to $11, which because it was an after hours, you can't even see it on this chart. And so those are essentially all the nuances of what I'm looking for on an overextended trade to the upside. And I'm going to keep it a little shorter on the next examples because the same concepts apply, but we'll go ahead and move on. That way you guys can see it on a downside example and then some others as well. So this trade was, again, one that I took yesterday, and this is pretty much all my thoughts around it, other than some of these news variables and other nuances like market cap, float, short float, and some of the other details, which I'll be breaking down in the actual trade recap video itself. So moving on to another example, we have Ethereum, which you guys have already seen the breakdown of this, but this is a fantastic overextended sell-off. This is literally the same kind of technical pattern as NCI was to the upside, except this is the downside, right? We have a steady downtrend. we end up going sideways. This is considered no man's land. And then we start to get big moves down away from that trend in a short period of time over like a 2-week period. And then we see all this volume done at the bottom, which is showing pretty much liquidations, people getting out of positions, stop losses being hit, everything like that. And then we get a nice 20% bounce in a day. So again, just from a chart perspective, we have the same thing. We have a steady trend. We see some no man's land for a little bit, and then we get that panic, which is a larger outsized move in a short period of time. So within these panics or these major moves to the upside, we're basically thinking, okay, how fast is this happening? Are these outlier ranges in dollar terms / percentage terms? And then also we're thinking of, what does the volume look like? Oh. 1 second. Yeah, so whenever we do get these big overextensions of trend from this steady trend, we're thinking, okay, how can we answer these questions? And I would say a lot of these are more experience-based. It's kind of hard to tell what an overextended trend looks like whenever you've only been doing this for like 6 months. But once you see these happen year over year, you will start to see them and they will just smack you between the eye. And it's the same thing on repeat in terms of a charting perspective, psychology perspective, and things like that. But again, we're just trying to stay on topic for this video in terms of the charting perspective, which is really hard for me to do because, like I said, it's not all about charting at all. It's a very small part of the equation. So moving on to the next example, this is going to be IBRX. Currently, I'm watching this for a short. I think this could be a fantastic short, but it's not ready yet. I think it's still in a steady trend. It hasn't really gave me signs of that overextension that we're talking about. And so I'll explain that to you guys a little bit. This is what I would consider a breakout. We have big move up from $2 up to about $8. And, during these actual days here, they are valid for a short. But you start to understand when you do this long enough that when something does not act a certain way in a certain period of time, for example, this is not breaking down for multiple days in this area, that means it's no good. The best shorts and reversions will snap back very fast. Just like if you were to stretch a rubber band to its max potential, it's going to snap back very, very quickly. And so in these moments, whenever you see it fail to break down on January 21st, and then you see it gap higher on the 22nd, and then we just chop around here, that is a huge red flag that this is going to go higher. And then also, like I said, the chart is not everything. If you understand the story behind the stock, you know that IBRX has a lot of retail interest in it. What do I mean by that? If you remember GameStop back from 2021, people were obsessed with that thing. People were extremely hyped up about it. You had all these online communities just ranting about it. And there's a very similar community for this kind of stock right here, IBRX. Also, IBRX is a biotech. They came out with some data, which is very attractive to a lot of people, apparently. And there's also some guy behind it who's like a billionaire or something that people really like. And so, again, if you are shorting things blindly and you don't understand these nuances, you're going to get in trouble. And that's the whole point of this video in a lot of ways. However, I need to stay focused more on the chart, clearly. But with that being said, also there's a 40% short float on the stock. And if you don't know what that means all the shares that are available to the public, 40% of them are short. That's extreme. That is basically just aligning every single variable for a massive squeeze, which is what we're seeing here. This is a mixture of that retail community, just people that really like the stock, and maybe that Dr. Billionaire and his friends, plus a lot of people that are covering their shorts up in these prices. And so for me, like I said, this is on watch for me. If we can get a gap up into $14 or $15, or we see a move tomorrow or Thursday that just goes absolutely crazy during the day, I'll start to be shorting this thing. But for the most part, to me, this is just a steady uptrend, especially from these prices here. And now we're just waiting for that overextension, which we talked about in the Ethereum example and the NCI example. So moving on to another example, we have Tesla. This is just a steady downtrend. This doesn't even get that extended, in my opinion. I don't think this is that great. This is ultimately just a steady downtrend. If you like to go with the trend and short these breakdowns, good for you. It's working very well. Um, and then this is pretty much no man's land. And then the trend starts to actually shape up and we end up getting moves to the upside. And so I'll keep it very short on those. I mean, I think you guys get the point by now of what I mean by steady uptrend, steady downtrend, no man's land, and very overextended stocks to the upside and downside. And then the last example will be QQQ. Like I said, we have been in a very choppy market the last couple months. In fact, my trading itself, I've only been taking like 1 to 3 trades a week, which is not that much. And there's just not as much volume or liquidity as we'd like to see right now. It's very different than this environment here where we're just going straight up in the steady uptrend. You know, people are more willing to buy stocks of all different types. You would just see more money in the market, more liquidity, and it just leads to bigger moves and more volatility. And so this is something you do not want to be trading in. I have not touched the NASDAQ or anything in this whole period since October or whatever. I just have no interest in this, and you see a lot of guys online who are trading this back and forth every day with funded accounts and saying, look at my 1 minute pattern where I bought this breakout or whatever. This is not going anywhere. This is no edge, literally no edge. I mean, you're looking for like 1% moves that are just random at this. This is ultimately how I view markets through stages of trend, overextension, and just basically places that you should avoid trading as well. Because like I said, knowing when not to trade is more important than knowing when to trade. So I hope this wasn't too much in one video. I definitely tend to just try to explain everything as fast as I can, as quick as I can, as efficiently as I can. However, I understand that that could be a lot, especially considering that a lot of this is foreign to a lot of people. So if you have any suggestions, any feedback, please leave them down below. However, I hope this helped explain how I view the markets and charts and technical analysis in general. And I also hope that this will allow people to avoid a lot of the noise online, trading trash like this, and allow you to focus on things that actually have edge and real why behind them, right? The only way we can make a trade is if we have a real fundamental why behind it. You know, it can't be a pattern. It can't be some special little indicator or whatnot. It's all based on logic. It's all based on positioning, emotions, psychology, and I wish more people would talk about it. So that being said, I'll see you guys in the next video. Thank you for watching, and please leave feedback.